Hello traders, Mike Mohebi here. Weekend again, and we're going to take a look at what happened during the past week. Today is 17th of June, July, August. Yeah, I forgot about it. And it's Saturday. Market is closed about 2 hours ago, as you can see. All right, the first pair is USDCHF. From now on, I'm going to use this 50 and 100 moving average just to have a kind of a trend direction idea of which way the market is going. So let's zoom in. As you can see, during the past week, USDCHF hit this barrier down here, and it stopped actually from going down, and it's fluctuated once during the past 2 weeks. This week it just moved up, and I don't know what's gonna happen. Maybe it hits this moving average here, it's gonna flatten out, and we're gonna have probably a kind of fluctuation this week. What we're gonna do, generally at the moment market is going down. You know, whenever the price is under the 50 and 100 moving average, both, the market is going down. So I've tried this before. I took buy positions in these conditions. Sometimes I won, sometimes I lost. Mostly I lost the trade because the market didn't move as much as I had planned. But in the downtrend, if you get a sell position, it works out pretty good. So I don't get a buy position. So up to now, the market has stopped. I know they have a double bottom here, and many of you may get into the trade. But just think about this properly. You know, the banks and the big hedge funds see this as well. They are looking at the same chart as you see, and they know that this is a double bottom, and many of the traders gonna take this position, the buy position. So be careful if you want to get this into the trade in the long direction. I just wait until the price comes in this area between these two moving averages, and then if I get a sell position, I enter again. USD CAD is the same. As you can see, price moved upward, stopped between these two moving average, came back down, touched the 21, touched the 50, back up again, touched the 100, and now it's going down. Maybe it just drops, maybe it just crosses the 100 moving average and goes up. So we just wait and see what happens. If you zoom out, you will see that we have this kind of a nice trendy thing and fluctuation as well. Both in this pair, you see these lines, and this way, probably, you know, if you look at this way, the trend lines, it shows you exactly what's going on. We have a very strong resistance in this area, another one on top here. So these are the things that you should be careful. At the moment, market is almost moved up, almost to the top of the channel. You know, it touched the channel, kind of got close, and it's going down. So I prefer, you can look at this 100 moving average. It's been going up and up for a long time, and now finally it's just heading downward. That means that the market for some time is gonna go down. Maybe it fluctuates up and down, but at the moment I don't recommend to get any buy position. Stop and wait until you get a very good sell position. Yeah, so here we have these sell positions, and if you have it depends on your strategy. If you get a sell position here, it's a very good time to get in. USDJPY, this is the same thing. You know, the 100 moving average and 50 moving average both are going down. If you had any buy positions in these areas, probably you got out with a very small profit. You know, it's 120, 130 pips. Over here, maybe you get the trade here, and then you moved about 80 pips. But if you got this position down here, the market moved about 300 pips. Even if after the close of this big candle here, you got in, it's 220 pips. You see the movement in the down direction is like 3 times bigger than the movement in the upward direction. That's the problem with the direction. People, the traders, don't decide which way the market is going, and they go against the flow of the market, and they lose their trades. Euro USD, the general direction is downward, as you can see, for a long time, probably about 2 years, more than 2 years, the market is going down. So every time you got in, you know, these are very good moves, you know. As you can see here, up, down, up, down. Every time you got in, probably you won some pips, but there are gonna be some fluctuations that they're gonna wipe out your trades, like here in this small one. See this small one, you have a very big pin bar here, and then boom, market just hits your stop loss. Here is the same, goes up, touches your stop loss, goes up. Maybe you got some pips here, but generally you will lose. If you remember, during the past 4 or 5 weeks, we talked about this head and shoulder here, but that's not the proper head and shoulder because the market is going down. I like to see this head and shoulder at the top of a trend or at the bottom of the trend, and the trend direction is going to change. But this is in the middle of a downtrend, and this is down head and shoulders. I don't like this kind of, but we got in. If you remember, this is the neckline, and we got some pips out of here, if you remember that. But I don't recommend this now. And if you remember this big pin bar here, I had a trade and I got out probably almost at the end of here, and that was a very good one. But we had these big fluctuations during the past 2 weeks, and finally market crashed, and for 4 straight days market went down. Now it's at the bottom. I still don't recommend to get into the buy position. All right, just wait. Market's gonna probably stop here and then reverses back for some time. If you get a pin bar, something like this, maybe you get a very scalping position, a small one, 1 to 3 days, but not more than that. We don't know what's gonna happen in the market. We go to Euro AUD. Euro AUD has been very good. I've had some good trades. As you can see, the fluctuations going up and down are almost long enough for us to get into the trade. Here we had another head and shoulders, if you remember, this beautiful one. It crossed our neckline and we got in. I got very few pips. I traded my stop almost up to here, and then finally it went back up and it touched my stop loss and I'm out. So I didn't got any profit much, you know, the profit was too small. But if you had this trade upward, because the, you know, the 50 moving average, see this blue line is above the 100 moving average, so you should get into the buy position. I didn't. I waited until this pin bar again, and I got out a little bit small, you know, lower here. So that was another strategy, the pin bar strategy, and the price action I follow. But if you are a technical trader purely based on technical analysis and chart patterns, it's better to wait now. So the market, the price comes down, touches the between these two moving averages, and whenever it starts to move up, you just start to find some positions, find some very good area to get in, up to your strategy. The next one we're gonna take a look at is EURJPY. This was very good as well. I had some losing trades in this one. Just, you know, if you don't follow your strategy, you're gonna lose some. I think my trade was somewhere, I don't remember it, this a small correction or the other one, you know, I think it was the second one, because we had this double bottom here and I thought the market's gonna go up. It went up, but it came back down. I traded my stop and I got a break even and exit, you know. So when market moved up to here, I had traded my stop, and this big candle here touched my stop and I am out. So I didn't lose much, but actually I didn't win too. So far the market is going down. As you can see, if you draw these small resistances I talked about last week, every time the price breaks these small resistances, you can get in. See these, even here. But at the moment, market is fluctuating between these two levels. So stop to see what happens during the next 2-3 weeks. You know, we are in the middle of the month. See what happens. Just wait. Yeah. So every time you get these small you know, resistance lines, kind of trend lines, you're gonna win a very good trade. That's how you collect money. So the next one, GBPJPY. Many people, I'm pretty sure, lost probably a good percentage of their account because of this. Every time the market moved up, these small pin bars, these are all signs of it going up. People thought that, okay, the market is gonna slow down, and it's slowing down, and then finally it's gonna go up. Boom, this crash happened and everyone is just wiped out. That's what I'm saying. Just go to in the direction of the trend, especially this 50 moving average, as you can see, going straight down. It's just no fluctuation, no nothing. So be careful of your trades. If you look at you zoom out at the long view, you know, bird's eye view, the market is almost at the bottom, right? This is 2016, middle of 2016, early 2017. So the market moved up and it's going down. Market has been up there in 2015, middle 2015, crashed, and it's kind of fluctuating. So you see this 100 moving average, how good it's showing the trend. So whenever the price was above this moving average, you could get only in the long positions, only open buy positions. Whenever the price is lower than under these two moving averages, or at actually the 100 moving average, you only get into the sell trades. Do not open buy positions, and you're gonna, well, the fluctuations in this pair is too big, you know. It's kind of exotic pair. It just moves a lot. And as you can see at the moment, the ATR is 152 pips. So the movement is too big. So you could get some pips out, but I don't recommend, you know, it's not worth the risk. Sometimes you're gonna lose. Well, let's see here. Grab my pen. See, these are small moves here. This one, maybe that one. These are the moves that you're gonna lose. Maybe you win this one, big one. Maybe you win the other one here at the early. This pin bar, big pin bar here is early. I think it was 3rd of January this year, not 2019. But these small moves, they're gonna wipe out your profits. So it's not worth it. It's better to keep your money, stay aside until you get a very good sell position. See these small pin arrows we have here. Let me zoom in. If you zoom in, see these small arrows. These are like sell positions. Even if, you know, you see the market is going up and up and up, but still you would be in a very good situation. I don't recommend to get the sell positions because the price was above the 100 moving average. But whenever see this kind of fluctuation is kind of a flag, or market is just dying out, the fluctuation is getting lower and lower, and then suddenly the price crosses the 100 moving average, you know how the moving average stopped price from going down and suddenly it breaks. It's better to get in around this area and then keep the trade on until you see a kind of a reversal. So you would get out maybe in this area and you would have a very good, let's see how much was, about 400 pips in like 20 days. That would be a very nice profit. So do not get into the buy positions at the moment, though the market is going back up. But at the moment, I don't see any trade. Just wait until the market comes up, maybe to this area, and then when it goes down, you get another position. GBPUSD, this is the same, a little bit more obvious moves. The fluctuations are a little bit bigger, but that's the same thing. All the GBP pairs are almost the same. You see, all of them are going down. Even GBPAUD is going down, though AUD is devaluing their currency. Australia is devaluing their currency much bigger than any other currency. But as you can see, British pound is going down, so the market is falling. No matter how much Australia tries to weaken their currency compared to pound, still the market is going down. And this big pin bar here, see that this was a very good solid position. You could get 2 straight days down, very good profit. Okay, we go to Australian dollar pairs, AUD USD. You see my position. I have a buy position, but because of this pin bar, you know, after I was 1 day late, and I have my stop loss down here. But as you can see, this is a buy position that I shouldn't get. It's pretty clear, you know, the price is under both moving averages. I shouldn't get this position, but that's the very good example of what not to do. Market is fluctuating. Probably it's a flag. See this flag here? It's going down. We're gonna have a small maybe rectangle, and then probably market's gonna crash. So I better get out at the open of Monday, whatever it is. That's why I put a very small target here, and it didn't touch my target. So it's after 5-6 days, I better get out. This is not a good position to keep. AUD CAD, that's the same thing, you know, it's going down, no difference. See these trends. This is a very good channel, you know, very straight channel. Every time price comes up, touches the channel, it just crashes. It's very good. EURJPY, that's the same. You know, these pairs are almost the same. They move almost, not all the time, but almost in the same direction. So you better group these pairs together and just get into one of these. If you want to trade Aussie dollar, just open a trade in one of them. They all move the same. So if you have 5 positions in 5 different pairs, all of them starting with Aussie dollar, you're gonna lose all of them if it hits your stop loss. Yeah, you're gonna win big time if all go into the direction, but what's the difference between opening 1 big position and 5 small positions? You know, all same in the same direction. Go to Canadian dollar, CHF, Swiss franc. This one is good. As you can see, we have, the reason I opened the buy position here is we have all fluctuations, you know, these, see these lines. So the market is not trending. This 100 moving average is just flattening. The 50s as well, just going straight. That's why I just, every time market comes down, touches the bottom of the channel, which is here, we have 2-3 big pin bars, you know, and this big candle here. This was, I think I opened the position at this candle here. It moved a little bit higher at the end of the day, and suddenly the next day crashed. Probably they took a lot of stop losses, you know, many people lost their money. This was a clear entry signal, buy position, but you know, big banks, that's how they make their money. Market moved back up in the past 2 days, and I'm not in a very bad position. It's just a little bit lost, but I'm pretty sure the market in the next weeks, maybe 2 weeks, gonna move up. My target is very high, you know, I just put it there just to have a target, but probably I'm gonna get out after the price crosses above the 100 moving average around this area. So yeah, this is a good position. If you don't have, just analyze. If you get a signal from your strategy, this is pretty good. We go to New Zealand. We have 2 New Zealand pairs, CHF and New Zealand CAD. This one is going down as well. Let me clear these 2 lines. You can see that the market has been fluctuating in a big, you know, these lines, kind of, that's the channel, you know. You have a small, sorry, not a small, there's a big low here, another low, and if this one moves up, we're gonna have a higher low. But that doesn't mean that direction is gonna change. It's just fluctuating between these 2 big lines, you know. It's gonna go up. So what I see, I look at this 150 moving average. 50 is showing better direction change here, going up, down, and you see this fluctuation. So right now the market is under the 50 moving average, and I don't recommend to get in. Market is just going down. But whenever something like this happens, this is a very perfect example of a head and shoulders, you know. See this head and shoulders here? That's what I'm talking about. Going up, this is the neckline. This is at the bottom of a trend. market has been trending for the past 5 months probably from up here, and then now market almost came back up and touched all these highs. So this head and shoulder is a perfect head and shoulder to get in. You know that the market is the price is going up because the market has been going down for a long time, and the head and shoulder happened at the bottom of this trend, and this shows that these lows, higher lows, are sign of the trend change. So you get in and you're gonna have a very good position. Let's see how much was the profit. The distance between the neckline and the head is about 300 pips. So whenever this crosses the neckline, you have a target of 300 pips, which is pretty obvious. It hit your target without any drawdown, just straight up in the probably 5, 8, 9 days, and then fluctuated a little bit, and then again moved up, and we had this fluctuation up there. So this is a perfect example of a head and shoulders. It hasn't happened yet here, but the market is at the same level, so you can expect to see a upward move, but not a good time to get in. So just wait until you see some clear signs. But the sell positions are good as well. If every time the price comes between these two moving averages and you get a sell position, that's a better time to get in. And the last one, we're gonna look at the gold and silver. Silver, I hope you remember, we had these trades, one there, we had the flag, it crossed upward, we have another one up there, we talked about it. I hope you got some good trades. It broke and it going up, it's stopped here. The general trend for the gold and silver for the next probably 2 to 5 years is going up. It's been down for years now. So expect to see some very good up moves in the gold and silver. Let's zoom out. You see, market looks to be at the top, but if it breaks these levels, it's gonna go almost up to this $21 per ounce. Very good move. The market flattened out and is changing direction. You see this, we had one low here, another low here, and this higher low shows that the market's gonna go up. So we had a higher high, but not yet. Market's gonna have a correction, and if this happens, we have a higher high, and this shows that the market trend has changed and we are in an upward move. So you could get a very good trade here. So wait, at the moment market is fluctuating a lot, especially this big candle here. You see, it almost took all the stop losses. They flushed out all the sell positions, they flushed out all the, I don't know, if you had a buy position and you trailed your stop loss, probably they took all that as well. They know what they're doing. All right, gold is the same. You see, market is moving up. We talked about gold in 2-3 weeks ago. We have this big move, we have a triangle here, and this move here is almost at the same distance of the pole of the candle, pole of this flag. We had another move before, very big long triangle here. So see, the pole of this candle, the pole of this triangle is the same as the pole of the previous one. So the flag pattern is a very good way of making money. Every time it happens, it almost works out pretty good. I've seen like probably 1 or 2 out of 10 that the market moved in the opposite direction. But if you see that the price is above this 100 moving average and the flag happens, flag pattern, you can be very sure that it's gonna hit your target. But you see this, let me clear all this, zoom in a little bit. See these 2 big candles here? It crossed above the top of the triangle. Many trades were triggered, and then they crashed the market. They took all the stop losses, and after that market moved upward. That's what happened to me as well. I had a trade up here. I had a buy stop here, and it took my target. It took my position. I was in the market, and the market crashed. I think this candle here hit my stop loss, and then after that market moved upward. It hit my target. I had my target almost above this green candle here. So the market moved to my direction and hit my target, but I was not on it. You know, this small movement here took my position out because the pip value of the gold and silver is too big. It's $1.48 pip for 1 pip. The drawdown on your account is going to be too big, so you must have a very small position, and the target and the stop loss going to be too high. 360 pips for the 1.48. It's going to be like a $500 for 1 micro lot. That's huge. All right, so you must have a very big account with a very small position for gold and silver. Be careful. But at the moment, market is going to fluctuate for some time. Maybe next week, next 2 weeks, it's going to form something else. Maybe it comes back down, touches the moving averages. So wait, this is not a good time to get into the gold and silver. All right, this was for this week, and thanks for watching my videos, and I hope you like the way I trade and the way I analyze. If you like my way of analyzing, give me a thumbs up to see that people learn something. And if you have any question, please ask in the comment section below. Subscribe to my channel for the next videos, and click on that bell icon so you will be notified as soon as I publish a video. Thanks so much for watching. Have a nice weekend.